Welcome back. I'm Pratap here. Today is the 27th September 2024. In this video, let us evaluate the performance of the high liquidity zones generated in our yesterday's end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you can find the tab posts. Some of you might be seeing the tab community. Whichever the tab you see, you click on the tab, then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the YouTube playlist supply demand zone price action course. Here you have all the training lessons are available. But you need to start your training from lesson 1.1. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please join at our Telegram channel. It will be helpful to you each time when we release a new YouTube video or any other important updates we will be providing at our Telegram channel. Now let's get into the analysis of the high liquidity zones. We have identified 3 high liquidity zones for today's trading session, and out of these 3 we got 2 stocks gave 3 trades, excellent trades. Let's discuss them. The first one is SYNGENE International. This is a 75 minutes high liquidity supply zone. We have a rally, 3 base candles and a drop candle. This is what identified by our software. And this 15 minute zone has to be fine tuned with 15 minutes time frame. Unfortunately, we don't have any 15 minute zones in this area. See, this is a ERC candle, but this is not a base candle. This is a medium size leg candle. This is another medium size leg candle. Unless there is a base candle, you can't keep them inside the base, because there is no base candle prior to these medium size candles. So you can't create a zone. Here also you see, you have a ERC candle, failed ERC candle. After that again you have another ERC candle. In between no base candles. So if that is the case, there are higher chances that this zone will be violated. At least 80% chances are there for the violation of this zone. Then what about the 20% chances? Maybe institutions may decide to create a new fine-tuned zone in today's live market. In the next retracement, it may give you trade opportunities. That possibility is there. We have already given a name to this concept, dynamic zone creation. Dynamic zone means during the live market, a new fine-tuned zones will be created. Next time prices reaches to that fine-tuned area, we get trade opportunity. That's why we given this topic name as a dynamic zone creation. Why we have given a separate topic? Because in the before live market, you do analysis of this particular high liquidity zone. You identified there is no fine-tuned zone. So what you do? You take a decision, okay, anyway this zone will be violated, let us leave this particular stock. And you don't focus on this particular concept at all. I mean on this stock at all. Anyway there is no fine-tuned zone. But actually sometimes what will happen? The zone won't be violated. Institutions will create a new zones during the live market. Maybe the same day price retracement may happen, we get the trade opportunity, but we will be missing. I don't want you people to miss such kind of concept. That's why to make you remember, I have defined a new concept, dynamic zone creation. The reason why I have defined a separate concept is so that at least you remember there is a possibility that during the live market new zones will be created. That is what happened today. Today in the live market. Today at 9:30 candle, a rally candle is created. After that, 2 base candles. 9:45 candle and 10 o'clock candle. At 10:15 candle, there is a leg out candle. See, we got a new fine-tuned 5-minute zone during the live market. This newly created fine-tuned zone during the live market, we named it as a dynamic zone creation. Dynamic means during the live market. Next retracement. When next retracement will happen? Maybe same day it might happen, or maybe after few days the prices again may reach. At the time if our software identifies, we can plan our trades. That way also possible. But today, the same day, prices reached this fine-tuned area. But before that, we need to fine-tune up to 5 minutes time frame. So I'm shifting the time frame to 5 minutes. See here, two zones are created, two fine-tuned zones. We have a rally, you have a base, and then you have a drop candle. Again you have a drop, 3 base candles, and again a drop candle. And here you have a 15 minutes target zone is also there below this. See, rally, base, rally. After that prices came, again LOTL zones are created. Maybe it could be a high liquidity area. Maybe. Because one of the characteristics of high liquidity zones, within the same area, again new zones will be created. Need not be always, but such kind of scenarios, at least you can predict it could be a high liquidity. We are not saying it is a high liquidity. It could be. Okay, anyway, this is the 15-minute zone, target zone. And in the 5 minutes time frame, today prices reached the first fine-tuned 5-minute zone. After that, it reached the target, maybe just 10 paisa before. Again started moving. Anyway, we will keep some 30 paisa or 40 paisa buffer and you will exit in general. What about the RR? RR you have almost 1:3.1. Okay, 1:3 RR is there. With small entry buffer, stop buffer, 1:3 RR is there. And when you got the entry, at 11:40 it got the entry. See, at 10:20 the zone is created. At 11:40, that means within 1 hour 20 minutes, you got the trade opportunity from this zone. How it pushed the prices? Till the next 15-minute zone, it pushed the prices. Because prices reached more deep inside. See, in this zone, they went almost very close to the digital line. Not very close, but deep inside it went. There are higher chances the zone might be violated. If it just touched the proximal line and returned back, maybe we would have taken a second trade. Because it went deep inside, maybe there are it's not a right choice to take second trade in this zone. If anybody had taken, it might have stopped out your second trade. But anyway, after that you see the zone is violated. Now again we got the entry from this second zone. This rally based drop, again prices with small entry buffer. Our trade would have been executed. This is also having 1:3.75 RR is there. And finally prices reached the target. Here some of you will have some misunderstanding here. Let me clarify, because I don't want you people again keep discussions in our chat box about this. Some of you may think, okay, rally, base, rally. This is a new target zone, there is no RR is there. This is not a rally candle, this is a medium size leg candle. Look into this. This is a base candle. You agree, right? This is the medium size base candle. See, the length of this candle is also almost same as the length of this candle. See, today all these are all big candles. These are all the big candle. See, this is a big candle. This is a big candle, large candle. Big means large candles. This is medium size candle. Compare this candle and this candle. Sorry, this is also 15 minutes. This is 15 minutes, right? These are all the medium size candles. Compare this candle and this candle. This itself medium size candle. This is the large candle. This is the large candle. All these are all, see, this is the large candle. This is the medium size candle. This is the large candle. Today the volatility is very high. That's why the candle sizes are very big. See, this is the tinny candle, a tinny. a small size candle. Again, this is a medium size candle. That way you need to understand. These two are medium size candles at 15 minutes time frame. So that's why don't assume this is a rally base rally, the 15 minutes. No, this is a medium size candle. Among the medium size, again, this is a small size among the medium candles. Among the medium, these are the bigger size among the medium size candles. This is the small size. That way you can see. That's why always you have to compare with the candles surrounding this candle. That is the way you have to take a decision. Otherwise, sometimes your decision making might be wrong. Maybe you can draw a zone rally base rally with compromised leg out. When you want to fine tune to find the 5 minutes order flows, at the time you can compromise at some extent. See, because this is not a 15 minutes zone, so easily next candle it is violated. We haven't seen any support from this zone. Easily violated. And finally reached the target. Okay. Because I know some of you might be thinking like this, rally base rally, and again immediately you will put a question in the comment box. And again in the comment box I have to give explanation. And these kind of explanations, to give explanations, sometimes I am getting irritation. See the length of this candle, length of this candle, length of this candle. All these are all small. That's why always remember in supply demand zone, you need to compare the candles in the surrounding candles. All these are all explosive candles. That means large candles. Why today many of the candles are large candles? Maybe today the volatility in the market is high. That could be the reason why we have seen large candles today. So compared to these large candles, remaining candles are either small candles or medium size candles. That way you have to understand. When you think in that direction, then your analysis will be perfect. Anyway, once your experience grows, slowly you will be able to understand. Some of you people already gained some experience, seen such kind of issues earlier. So probably I hope you might have drawn these zones properly. But some of the people recently completed the courses or maybe practicing for the last 2 months or 3 months. Slowly you will understand these concepts step by step. Once you practice, you will get the perfection. Okay, but otherwise, what is the profit? How much profit these two trades has given? So let me open the Excel sheet. SYNGENE, the first trade has given 6,500 rupees profit, 6,550. It is 4.1% ROI as per one futures margin cost. Second trade has given 9,700 rupees profit, which is given 6.1% ROI based on one futures margin cost. Hope you got the clarity. Let me go to the 5 minutes time frame. So this is the first trade and this is the second trade. So this is about SYNGENE. Next one is we got another trade opportunity in JKCEMENT. JKCEMENT is a daily high liquidity demand zone. This is the ERC candle as a leg-in. This is the base candle. And again this is a rally candle. This failed ERC candle is a leg-in. Even though it is a failed ERC, if you look into the dynamic viewpoint of view, this will be a rally candle, rally base rally. And this daily zone we fine-tuned with 75 minutes time frame. In the 75 minutes time frame, identified a rally base rally. This is the medium size rally base rally. And within this rally base rally, again identified fine-tuned with 15 minutes time frame. So in the 15 minutes time frame, again we have a rally, two base candles, and again a rally candle, follow through candles. So excellent move after this rally. Definitely the order flow in this area could be very strong. This rally base rally again fine tuned with 5 minutes time frame. So see here you have a drop, 2 base candles and a rally candle. What I did, why I have, you might be wondering, why I didn't draw a zone like this? Why I have drawn like this? You can also draw like this, nothing wrong. The reason why I have drawn like this is to minimize the risk. Sorry. To minimize the risk, I have drawn like this. This is my risk management. Up to prices come here, I want to take a trade otherwise. But this is a drop candle. You have 2 base candles, drop, base, rally. You can also draw like this. Please remember. Risk management point of view, what I did, I just moved. This is the way, maybe I am feeling this is the actual order flow. Probably from here the big move has started. So here you have strong order flow might be there. This is how I am thinking, and I drawn the zone. Risk management point of view I have drawn. But according to supply demand zone point of view, if this is the leg-in, you have these two are the base candles. This is the way you have to draw for type 2 proximal. But according to the risk management, it is up to you how much you want to reduce the length of this zone. Everything is depending on your risk management. Here your experience plays the major role. Because I have confidence that mostly prices will come here and from here it will move up. But again, outside the zone I have drawn again rally, base, rally. Actually you can also draw like this, a zone. Again, risk management point of view I did like this. Rally, 2 base candles and rally. But I have drawn risk management point of view. If you draw like this, probably you see. Let me show you. See, earlier prices just reached the zone and then again moved up. So this zone is not letting the prices to get into this high liquidity zone area. This 5 minute zone is not letting. See the push. How big the push. It went up to here and then again started moving down. Such a huge push it has given. Continuation to this. Why? What is this concept? Can you remember? Lesson 21 we discussed this concept. Recently also we got such kind of trades. Couple of trades in TCS. Few days back you have seen TCS. TCS not only it supported high liquidity zone, it also supported bullish trade setup for monthly income trade. It also supported bullish trade setup for weekly income trade. Both it supported. Before actually prices enter into the TCS zone, we got 2 trades. What is that concept? Dynamic entry buffer. It is the concept we developed generally before the high liquidity zones. Institutions keep dynamic entry buffers for sometimes some of the zones. But really it is a normal zone or dynamic entry buffer. At least one test we need to consider. Confirmation. One test is for confirmation. See, this is confirmed us. This area is a dynamic buffer and pushed the prices. Here there is a strong order flow is there. But what I did risk management point of view, I just fine tuned like this. Even though both these candles are part of rally, 2 base candles and rally. See here exactly the same technique I followed here also. Drop, 2 base candles, rally, but I consider only in the base candle before the leg-in for my risk management point of view. Similarly here also. Why I want to do like this? One is to minimize the risk. Second advantage, due to any reason if this is violated, because this is not inside the high liquidity zone. This is not a fine-tuned zone. So always risk management should be very strict. So I don't want to get maximum loss. I want only minimum loss. All these factors. Suppose second time before entering into this zone, again if it started moving, maybe you will be missing the trade. You have to accept. If prices come here, you are trying your second trade, and again from here if prices are moving up, you get good profit. Exactly the same thing happened today. See, today the prices entered into this zone in which candle? Morning 9:25 candle, and this zone is slightly pierced, slightly. Definitely it will be within the stop buffer, no doubt in that. Some more below it would have gone, we would have exited. And after that again we would have placed a trade in this if prices are entering in this fine-tuned area. This is a fine-tuned area. But anyway, today prices did not go. Just before probably the stop buffer area, a lot of order flow might be there. Again it pushed. Until the next 15 minutes target zone. After some time again it is also violated. But anyway, when we got the trade at 9 o'clock 25 minutes candle. And when it reached the target, 9 o'clock 45 minutes candle. How much time it took? Just 20 minutes. In 20 minutes, JKCEMENT has given 13,187 rupees profit, which is 12.4% ROI. Why such a huge ROI? Because the margin cost of this JKCEMENT is very less. It's around 1 lakh or 1,05,000 something is there. The margin cost. Because the margin cost is less, you got a very good ROI today, 12.4% ROI. SYNGENE is having around 1.5 lakh, or a little over 1.5 lakh, the future margin cost. But this is only 1,05,000 or 6,000. That's it. That is the reason why you got. Okay, look into the 15 minutes. Again, you get a lot of doubts here. Drop, base, drop. Remember, this is a medium size candle. But this is a big candle, right? Definitely this is a valid leg out. Drop, base, drop. Why we didn't drop? I know some people will ask this question. Why you have drawn here? Why can't we draw like this? Because this zone is violated in this candle. See here. Go to the 1 minute candle, you will get clarity. Before we get the trade, this zone is violated. That means this zone is no more valid. Once a zone is violated, you have to remove the zone from your charts. That's why I removed it. Then where is the next 15-minute zone is available? Here you have a 15-minute zone, drop, 3 base candles and drop. Why I didn't consider this is, see, it's all experience. This is the area order flow, because see, generally sometimes you might be having, see, your experience is required. That experience you will understand from lesson 1.1 in our training course. How well you learned lesson 1.1 in our training course. The 1.1 lesson looks like a small story, but a big message is there in that. The main secret behind supply demand zone price action I explained in lesson 1.1. I clearly told you. Prices will be moving in a narrow range when there is equal demand and supply. See, this is the area, narrow range. Narrowly they are moving. Now prices came down. Because it is the medium size leg candle, you didn't consider as a leg out. So you might include this zone. See the next candle again. This is a reflection to this behavior. Again with gap up and again came down. Probably this is the closing candle of previous day. So that's why I am keeping, this is the area, because prices also opened with gap up From here again it came down. Probably this is an area, strong order flow will be there. Definitely there's order flow is there. See, prices entered and then again came down. Because demand is very strong, later again this zone is violated. But before violation of this zone, at least it has given some resistance here. It resisted the prices. It does not allow the demand easily violate this zone. Lot of resistance, so many candles. It consumed all the demand, and finally in this candle, the zone is violated. So this is the reason why. See, sometimes the medium size candle looks like a actually leg out candle, but not really a leg out candle, because slightly smaller than the large candle. Maybe this could be a big candle among the medium size candles. That's why sometimes it may create an impression. You can still draw a zone, drop based drop. As a compromised zone you can draw. If you want to fine tune this area, such kind of scenarios, you can compromise and you can draw. But now we are not taking for the entry, we are taking for the target. Generally what you do when you have such kind of doubts, safer point of view, you go to 1 minute trailing stops. 1 minute trailing stop you go use before reaching. Suppose prices are reversed. At the time trailing stop, but you see here continuously, without any zone, keep on moving up, moving up, moving up. Here maybe you have a rally base, rally created, but no retracement until it reaches your ultimate target. Sometimes when you feel I'm stretching, if you are stretching, stretching means you are extending your target. If you feel, let me go to the 15. Sometimes you may feel, maybe I would have considered this drop base, drop, not even though not convincing still. But do prices after reaching again they come down? Or does it really break the prices? When you have such kind of doubts, when prices are nearing to that area, at the time use a trailing stop. Before that you need not worry about trailing stop. Anyway, this is clearly violated. This drop based drop is clearly violated in this candle. So it is not valid. This is completely, these orders are gone in this area. This is violated. Probably 5 minutes level some flow will be there. Here maybe some 5 minutes level zones might be there. Somewhere here, see here, ERC, 2 base candles drop. This could be a 5 minute zone. So this is also violated, see here. This is also violated in this candle. And here no proper 5 minute structures also not available. Okay, anyway, just I am telling you this technique. Sometimes you will be missing good profits like this. If you don't properly analyze your target zones, just like that if you draw, either you will be missing the trade or you will be missing good profit sometimes. Sometimes when you have a doubt, some kind of doubt in your mind, when you want to give benefit of doubt, at the time use a trailing stop loss. That will protect you. If really there is a strong order flow in this area and pushing the market down, probably one of these 1 minute zones will be violated. At the time you will exit. Whatever the profit, you will book with that profit. Otherwise you see how much profit you got today. It's a very big profit you got. And moreover, your trade is completed in just 20 or 25 minutes time period. So exact 1 minute candle we will see. You got the trade in this candle, 9 o'clock 28 minutes. Reached the target in this candle, 9 o'clock 47. That means in 19 minutes you completed your trade. That means 20 minutes. And that too, how much ROA you gained? 12.4% ROA you gained in just 19 minutes or 20 minutes. That's excellent. And moreover, the topic is already you learned in lesson 21 dynamic entry buffer. This is not the dynamic fine-tuned zone. Please remember, this is a dynamic entry buffer. We have, on the name of dynamic, you have two topics. One is dynamic entry buffer and another one is dynamic fine-tuned zone. The previous stock, SYNGENE, whatever the trades you got, they are all dynamic fine-tuned zones. This is the dynamic entry buffer. These entry buffers doesn't allow the prices get into the high liquidity zones easily. But next time easily it will get into this area because finally this dynamic entry buffer is violated. Next time the prices may easily get into the fine-tuned area. If our software next time identifies this particular stock, you can plan a trade. And the last one is again a 75 minutes demand zone. This is RT Industries, 75 minutes high liquidity demand zone. This is the drop candle, 1, 2, 3, 4, 5 base candles and a rally candle. This is what our software identified. See, 1, 2, 3, 4, 5 base candles and then rally. And this we fine-tuned with 15 minutes time frame. See here you have a drop, 3 base candles and a rally candle. This is not a fine-tuned 5 minute zone. This is just a 5 minutes aggressive trade setup. I will explain. Okay, now let's move on to the 5 minutes time frame. So in the 15 minutes fine-tuned zone, we have an excellent again rally, base, rally. Rally, base, rally is there. So this is the area we want to plan a trade. But below that, there is also a failed ERC candle. This can be used as a rally candle. You need to think from the dynamic view. Again a base, wick to wick I have drawn. Again a rally. See the rejections before the zone. All these rejections. That means in this area, very strong order flow is there. Even the orders also did not enter into this zone. Just touched the wick, the upper wick of this base candle. Just touched, that's it. So next time maybe we can plan a trade in this zone as an aggressive trade setup. But if you want to plan a trade, first this has to be violated. But anyway, today prices did not enter into this zone, so we didn't get any trade opportunity in RT Industries. So these are the 3 high liquidity zones identified. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.